Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, so we finally got a little bit of a break to the downside. And I say a little bit of a break to the downside is because, yeah, we were down 4%, but all we did was really come back to the daily mid-band and put in support here and here. So daily mid-band support also coincides with monthly pivot support. So, look, it was a great day to be a trader. It chopped a little bit off the open, and once it broke, there were a few different breaks during the regular session yesterday. The initial break, I'm just looking back at our shorts, 57.5 was a good one. The real break though was at 35.29.5. That's where it really kind of got loose, and that opened up the move to weekly pivot. So there were some big downside moves. We had a nice long yesterday on the bounce because it comes down, it does this one, then it does this one again, and the jobs report this morning was probably not as volatile as people were anticipating. They traded as low as 47. The problem with that was on the bounce they took out the hourly mid-band and volume weighted average price, which was at 56. And they headed right back up to the weekly pivot, which is where we're trading right now at 69.70 area. I'll be watching this morning to see what side of the weekly pivot price wants to trade on. If it wants to trade above 70, it can reach back for 84, which is your Globex high, 84.25. If it can hold 70, okay, off the open, and we open in about 20 minutes. If it can hold the weekly pivot, if it can make a lower low and break 45, that opens up a move back to 24. And that's really where the rubber meets the road. You've got the monthly pivot and the daily mid-band. Daily mid-band is at 34.29, monthly pivot 34.24, half basically, which is the low from this move down. If it can somehow convert that 24 to 29 area, that opens up a move back to 3,400. The bears would love to end the week on that. But it all starts here at 70. It starts with defending 70, certainly not letting it get above 84, because if you do above 84, you're going to do 3,500. So I think we're going to hit, potentially, there's potential, and it's not great potential, but potential is what it is. It's not a high probability outcome, but to hit one roundy or the other today is pretty probable the way the volatility's been going. And what the bears really need to do now is they have to follow through. What they have to demonstrate on this daily chart is that they can put together more than a day. You can see we've had red days before. We had one there. We had one there. We had one there. We had a couple there. That was exciting. One. Now, is this the biggest break we've seen? Sure. But we also did, basically 200 handles in 9 sessions. And even if the goal is to go test the 9-day at 34.94 and hold it, that's fine. But you need to break this 24 area. You need to get down into here. The baseline assumption we always make in any market that we trade is, are we trading above or below the daily mid-band? If we're trading above the daily mid-band, if price wants to be above the daily mid-band, and as of 9:10 in the morning, it does, it's a buy dips market. If it wants to be below, if it consistently trades below, it's a sell rallies market. That's on, day trades are day trades, but on a longer term theme, this thing remains buy dips. And we're 40 handles off the lows, and we've been as much as 60 handles off the lows overnight. So there's a lot to look at this morning. We're heading into a holiday weekend. That always favors the bulls. So we'll see what their intentions are regarding 70 early, and then we'll follow price from there. All right, everybody have a fantastic day. Have a great long weekend. Be safe, be healthy, take care, trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.